Good morning, everybody. Welcome to the Vegas edition of the game plan. And certainly doesn't necessarily look like I'm in Vegas here. I don't have the casino behind me or anything, but nonetheless, in the hotel room here. I had a good day yesterday. It was fun. I honestly spent, let's see, pretty much the entire day up until about 1:30 p.m. Eastern time or Pacific time here, 4:30 in the room. I did run out to get a sandwich to eat, but markets are open, so you guys know me. I'm trading them, I'm watching them, I'm keeping everyone updated on what is going on with the equity markets. And we knew PCE data was coming in today, so had to get ready for that, had to prep, look at the charts. What were the charts telling us? Really, what they were telling me going into it, and I said this yesterday, is that it probably comes in line with expectations. We saw CPI coming in a little bit better recently, and so expectations got ratcheted down to kind of be tame inflation numbers. And that's what we got today. There's no doubt about it. Markets had been trading up into that, so you're actually seeing a little bit of a fade off of it, but markets are still net positive. We can jump right into the charts here and get our first view of it. All right, so first and foremost, what we see right here, guys, is that the spiders SPY yesterday closed right here at around 546.56. We did trade up overnight. I think this has to do with the dollar yen stalling again. It's not really pulling back on the dollar yen, but it's not going higher. I have a suspicion, and I'm going to tell you guys this, and I'll just tell it quickly. We'll go into it in a second, a little bit more in depth. But my suspicion is that the Japanese central bank is ever so slightly intervening, not enough to raise alarm bells as a currency manipulator, but they're just trying to keep it under wraps here from really pushing higher. They're not trying to push it down because that would be obvious. That's what happened last time. But we'll go over that in just a minute. Okay, PCE data here, guys. PCE came in month over month. Take a look right here. Came in at 0.00%. Expectations were 4.00%. Year over year, if we just go down a little bit here, we can see year over year came in at 2.6%. Expectations were 2.6%. So it was literally in line with what expectations were. Now, the kicker on this front is that ultimately, what do we have? We have a scenario where the inflation numbers are becoming more tame. We've seen nickel fall 20% recently. We've seen copper down 15%. We've seen oil going up a little bit, but honestly, I think that's more due to a short squeeze with institutional investors. They got way overloaded to the short side on oil and had to backpedal a little bit. Now, the one caveat here, look at that bottom number right here, right? If we go down here and we look at this, what does this say? Personal spending month over month. And by the way, MOM, that's month over month. YOY, that's year over year. Again, I sometimes assume everyone knows that, but I honestly think maybe people don't. I didn't probably when I was younger myself. Anyways, personal spending came in at 0.2%. That was below expectations of 0.3%. Now, why does that matter? Well, it matters because look at what Nike's doing. Nike's getting crushed here pre-market on the back of their earnings numbers, right? So if we go over to the Nike chart, Nike reported earnings yesterday after the bell. Look at this chart in free fall. Incredible. Let me zoom in a little bit here so we can actually see where it's going. But look at the drop on Nike right now, folks. This thing is getting pummeled, trading at $79.30 after closing at around $94 yesterday. Now, Nike reported earnings. The earnings beat themselves. Their revenue missed, and they warned like crazy. They said China is not recovering. So that's number one. Number two, they said the U.S. consumer is not spending like they used to, which is something I've been preaching to you guys was coming and is happening for a long period of time. So all of these factors create a scenario where things are getting a little bit messy. But you know what? As long as investors are not scared and the VIX stays basically below 20, you probably just see a rotation of capital in the markets versus capital flying away. Now, in terms of a level on Nike right here, guys, we have a pretty firm level. $78 is the 786 Fibonacci retrace. Just to note here, you're taking the low of right here, the beginning of this bull move. You bring that Fibonacci all the way up to the recent high, and that gives you your Fibonacci retrace, which again is the 786 at $78. And that's also an upsloping trend line from that same point to the COVID low. So again, we can see the COVID low right here. It goes right through those two lines and comes out at 78. One of my favorite things is to look at levels that coexist together, right? It's called multiple factor trading opportunities. And this is really what I love to do, guys. Again, it's looking at multiple factor scenarios. And essentially, when you have multiple factors together, the probabilities of a bounce in a stock that's falling is higher. Same thing on the resistance side. If you're looking to short a stock or you're looking for a place to sell a stock or a crypto or a commodity, if you have multiple levels or multiple factors at that same level, the odds are you're going to have a much higher probable situation of a pullback. One factor is good. It probably gets you above 50-50 odds, but two factors can get you to over 60, three factors potentially over 70% success rate. And really, the golden goose is four factors. You get four factors, and you're easily over 80% success rate. Now, remember, 80%. People think that we talk in absolutes. There's nothing in investing and trading that's ever an absolute, right? So 80% still means 2 out of every 10 times you're wrong. And I certainly am wrong about at least 2 out of every 10 times. So we have to just remember that investing and trading is not about being 100%. There's no trader out there that's 100%. If they tell you that, they're definitely BSing you. Okay, so just understanding that is a good thing. We do have that level on Nike, so we'll see how it goes. Quickly flipping back to the SPY. Notice on the SPY that initially we did see the markets pop up a little on that PCE data pre-market here, but then we did come back in, and you can see it right here. We came back in and sold off a little bit. Now we're still net positive on the day, so you have to respect that the markets right now are still looking up. 10-year yield, we had the bear flag. You guys know I've been talking about this bearish pattern. In fact, I've really choreographed this whole move on the 10-year yield. And you can see, again, we were in this wedge pattern. I talked about a likely breakdown coming. We got the breakdown right here. We then rallied, and we call it the scene of the crime retraced. It's kind of like the person who does the crime likes to go back and take a look at what they did, and then they're like, oh, cool, all right, and then they go running away again. Then we create this bear flag, in spirit of, I should call it a bear flag, and we're starting to come down. We haven't broken it yet, so it's still technically a flag pattern. It's not a breakdown yet, but that looks to me, based on probabilities, and again, I'm just using 25 years of technical analysis knowledge, that you should break lower on the 10-year. And really, to be honest, I'm starting to be in the camp that we could be in for deflation if the economy continues to go down like it looks like it is. When you look at things like nickel and you see these type of drops, let me bring up the nickel chart here. We'll go to the perpetual contract here. When you see drops like this on nickel and you see copper down as well, if we look at copper here, the drop on copper, it's getting a little bounce today, but looking at these 15%, this 15% drop on copper, yeah, oil's still hanging in there like I talked about before. It's probably because of the short unwinding of bigger institutional hedge funds. But at some point, the U.S. economy, especially if what Nike's saying is true, we're going to start to see China not recover, and then the U.S. slow even more. Oil's eventually going to fall, and I do think that you might be talking about deflation. Now, deflation sounds really good to all of us out there because it's like, oh, prices will come down instead of, and remember, even though inflation is back to basically like 2.6% per the PCE, remember, that's still every year 2.6% increase in prices that you're paying at every place you go, basically. So deflation sounds great. Oh man, you mean like a carton of ice cream or whatever is going to go down in money, right? It'd be less. That's good. But my issue with that is this, is that ultimately, what does that mean? It means that the Federal Reserve and the US government will feel like they have the authority now, because it's deflation, to print even more money. And that's what scares me, because if you game this out, and I always look at myself as being a chess player, right? I do play a little chess, but I'm not that great. But when you're trading and investing, you trade on what's happening now, and you look at what is potentially going to happen 5 steps away, right? You have to game out what the next potential scenarios are. So I was in the camp that we'd come to 3%, we kind of stall there, and then that would freak everyone out a little bit. We went through that phase. Now I'm in the camp that if the stock market falls, that's going to really hurt. I mean, if consumers are already hurting, so basically the bottom 60% are already hurting, those that don't have investments or a lot of investments. If you get the stock market to fall because the U.S. economy starts to fall, then you hurt essentially the consumer spending all across the board. That spirals demand for goods. We see obviously slowing economies hurt nickel and iron ore and all these other things. And you have a recipe for deflation. But the negative of that is that all of a sudden it gives free rein to the government to say, oh, well, listen, we can now spend even more money because it's deflation, right? We have to spend our way out of this recession, this really bad recession we're in. US debt goes exponentially higher. Let's say it's at $50 trillion instead of 35 trillion. Then you have the Federal Reserve saying, hey, we got to get us out of deflation in this recession too. So now let's drop interest rates back to, let's say, 3 or 2%, and let's raise our balance sheet by another $7 to $10 trillion. And what it does is it then, if you game it out, it now puts us in a situation where we literally could be looking at hyperinflation 10 years from now. And that's my fear. My fear is not deflate. I mean, to be honest, I think the mandate for the Fed should be zero inflation. Just keep prices stable. Just keep freaking prices stable for people. Then then you're not hurting the poor. Obviously the rich can handle inflation, but it's really the lower incomes that get hurt by inflation, and that's what's been going on. All right, sorry for my rant here. Let's get back to the charts. I just can't help it sometimes. All right. The US dollar today, slight downtick here. That's also probably helping the markets just a little bit. Let's look at the US dollar yen here. Notice again, this is what I mean by the soft kind of intervention. It does make me think, just because of the way the dollar yen is acting up here, is that we might have a scenario that maybe they're just kind of coming in and trying to keep the dollar yen right in this range versus letting it explode to the upside. Because really, this was a pretty impressive breakout. Now, granted, it could be making a bull flag for another move up. We'll have to watch it into next week. But ultimately, I've said this before, that even though the US has warned Japan not to intervene, it's very unlikely that Japan will just be like, oh, well, who cares? Let's let our currency crash, right? No country's going to do that. Like, they're just not going to do that. So at some point, they have to intervene if things get bad enough, because ultimately, if not, then they're in a whole heap of trouble over there economically as well. We're already seeing that quite a bit. Now, like, you could easily say that Japan has made their bed and they have to lay in it, right? Because they do have 250% debt to GDP, which makes the U.S. look like a standing star, like the North Star of fiscal responsibility, which it obviously is not. But again, it's just showing, in my opinion, it's showing us what likely will happen to the U.S. if we continue on this pace, which is, again, eventually the dollar continues to lose buying power and value. And at some point there will be de-dollarization, right? I mean, it may be, it's a long process, but we know historically that reserve currencies usually have about 100-year shelf life. US is coming up on that, obviously, as time goes on here. So that's another thing to keep an eye. Speaking of dollar yen, we're down ticking a little bit as we speak here. All right, so that's where we are on that front. Quickly looking at oil today. Oil was popping up a little earlier here, trying to get to my key resistance level. It looks like it's stalled out here. We'll keep an eye on it. You do still have the bullish pattern, but there's always a chance at these levels you could have a failure of a bull flag, which, by the way, one of the mottos that the methodology that I teach has is that when bull flags fail, the move in the opposite direction is epic. And so you'd see like a very fast, big move down. I still actually project out by 2025, we're probably at $50 a barrel. Year end here, we might only be at like $64 a barrel. But either way, I do think oil is going a lot lower as the economy slows here in the US. All right, keep an eye on that. Gold again, gold here, taking a look at that chart. It is pushing back into this little parallel. As long as we stay below this yellow line, I would consider it bearish overall still, as we're still in this lower range. Maybe we're still making a head and shoulder pattern. We can see shoulder over here, head here, and shoulder, which is a bearish setup if it breaks the neckline, which is right around this 2280 level. But again, if we did start to trade above this yellow line and we confirm, then you start talking about maybe a short-term little breakout that could take us back to those highs. By the way, what's going on in Japan, what's going on in the US, what's going on essentially all over the globe, it all leads back to the mid to long-term bullishness, in my opinion, for gold, right? When you see these scenarios where during expansionary periods, right? And this is what drives me nuts, guys. And again, I keep on going on these rants, and I apologize if you guys are bothered by them, but during expansionary periods, you are supposed to, as a government, pay down the debt, right? Because things are really good. You're getting a lot of tax revenue in the door. You're not supposed to spend more just because you have more. You're supposed to pay down your debt. What ended up happening is we had a great economy for multiple years, after COVID, and all we did was jack the debt up more. And we didn't take care of our fiscal house as a country, as a government, whatever. And now you're on the verge of having a recession. And I do think later this decade, at the 100-year cycle for the Great Depression, we could be in store for something worse than 08, 09. You're in a scenario where you get in that situation and you're going to have to, as a government, spend a ton, like literally 10, 15, 20 trillion to get out of that, which again, then breeds the question of, do we see that hyperinflation bug later on? And then really the collapse of the fiscal monetary system. Again, we'll have to watch and see. All right. So a couple other charts to go over here. Let's quickly look at silver and see what we have going on here. Wow, Nike just broke 79, guys. So Nike's coming down here. I am keeping a very, very close eye on it here. I got to flip back to this chart real quick because I am actually watching to potentially trade it as it comes down here. Oh, yeah, look at that nice drop. It's getting so close to my zone here. All right, let's keep an eye on this one, guys. Okay, in any case, going back to silver here. Sorry for that little disturbance there. Silver's upticking a little bit. We're still stuck in this downsloping trend zone. I'm still looking for a move down to about 28, where I will start to probably accumulate on silver. And then natural gas here, folks. Natural gas continues to just do its thing. Kind of has broken down. It's not at support. It's not at resistance. It's kind of in no man's land up here. Support would be down in this range, and resistance would be obviously up at the highs up here. One that I'm looking at, folks, this is a great one here, Palladium. I've talked to you guys about it before. With members of Smart Money Commodities, we unloaded half our Palladium position here. We then rebought down here on the retrace, and now it's pushing right back up. And I continue to really like this chart, guys. Again, if what I'm saying potentially happens, then not only is gold going up and silver going up down the line, but also platinum and palladium. And at 30 times rarer than gold, palladium and platinum are probably some of the sleeper plays at their current prices. I mean, you're at $900 and in the change, 900 and change level for palladium. Gold's at 2,300 and change, yet palladium is 30 times rarer than gold as a metal, right, as a precious metal. So again, granted, it doesn't have the same demand as gold, and you have to understand that. I mean, people around the world love their gold. We love our gold, but in terms of protecting assets, I like the value you get on a palladium and platinum at these prices versus gold, even though I still think gold's going to $5,000 an ounce. All right, so just a couple things there. Other than that, I mean, Nvidia here traded up in the pre-market. It's coming back in a little bit. Per yesterday's close, it's still net positive. It closed yesterday around 124. We're at 124.50-ish, give or take. So again, that's holding up. But yeah, I think ultimately that's the good kind of synopsis. Oh, I didn't cover Bitcoin today. Of course, we've got to cover Bitcoin real quick here, guys. Bitcoin is coming in a little bit on an intraday basis, but really, what do we have here, guys? If you followed my game plans, and I know a lot of you guys watch religiously, and I thank you for your time and dedication. I really do, and that's why I try to teach as much as I do in these things. But we know that this is a bearish pattern of consolidation right now, so you would factor that you eventually break lower. I do have my secondary support here, and then eventually a major support at around 50,000. And again, there'll be points where I start to accumulate Bitcoin. I mean, again, as much as I like gold in the long term, I like Bitcoin in the long term too. Again, a lot of people call me a bear on Bitcoin, but I certainly am not a long-term bear. I'm a trader in the near term, which means I go short a lot and I go long a lot, but I certainly am a long-term bull on Bitcoin. Altcoins, not so much, because again, you just don't know which technology is going to kind of dominate. If you look at 5 years ago, what the top coins were in the top 10, a lot of them are no longer in the top 10. And you just have to understand that it's a musical chairs in the altcoins. But Bitcoin, I do see that as the digital gold down the line. All right. On that note, guys, I am going to bid you farewell from Vegas. I will be back Monday in studio and just rocking it with you guys. I do look for key opportunities today. Watch that Nike coming down to some key levels down here. By the way, could Nike go below 78? I want to be clear on this. Of course it could. So it's just that's your first support in the live Apex live day trading room. I'll be looking at other levels below in case it goes below there, and we'll trade it accordingly. We'll dollar cost average. We'll make money like we usually do. And again, just be understanding of that levels are levels. They can be broken, but these are the key supports that I'm seeing in the charts. Thank you all so much for being a supporter here at Verified Investing. Seriously, guys, it's pretty darn cool to see this thing grow and see the dedication of all of you. So thank you so much. I will talk to you on Monday from the studio back in Florida, and have a good one. Take care.